Ay, ay. Wow, that was. Can everyone see the screen here? I'm pulling up a chart. I had to switch applications here. Yes, it's funny enough. I don't really speak that long normally, so when I do these webinars, I get really thirsty. Okay, so let's speak about the 1200 pip opportunity in the markets here. Where are the charts here? Everything just disappeared on me. Okay, can everyone see the charts properly? Okay, so what we have in front of us is a chart of the a currency or an instrument breaks out of a triangle, what we normally have is a pretty significant move to the upside or the downside, depending on where the break occurs. So this chart is of the British pound, and we see that we have a pretty significant break that the market broke out of the triangle, but it stopped curiously at the 170.43 high. Now what I'm projecting for the British pound, and this is where our opportunity lies, is that if this 170.43 level here fails and the market declines below 165, that will confirm a failure, and that would be a good opportunity to go short in this market. That means the breakout has failed and you can go short in the market. If the market does eclipse 170.43 here, we could see a further rise in the British pound. And this is a monthly chart of the pound, and you can see that the old high is at $2.10. Now, I'm not saying the market may go up as high as $2.10, but what may happen is that the market could go up to about 190 to 195. And where do I get that 195 level from? Let me just show you how it's a trick in technical analysis. This is how you predict. Let me just get the line a bit bigger here. This is how you can predict the extent of a breakout. So the triangle, the width of the triangle is here, and we just take this line from the breakout point, which is about here, and we get just above 190. That's a potential in this market. Now, for the year so far, the British pound has been the strongest currency. It has been strong against the US dollar, as we can see here. It has been moving sideways against Australian dollar, as we can see here. It's in a consolidation pattern with the Canadian dollar, but this is coming from a uptrend in the Canadian dollar. So what we could see is that if this market breaks out of this triangle here, we could see the market move up to easily 195 or even $2.10, not $2, $2.05 in the Canadian dollar. We had a pretty good move down with the British pound and the euro. So the pound has been the performer for the year so far. And this is where I would say the opportunities lie in the market. Currently, the market is pulling back, and what we're looking for with this market, the US dollar pound, is to see if the market stops at the monthly pivot point support. Now, let's take a look. Our pivot point support is at 167.64, and our weekly number is at 167.54. So if the market does go down into this area, I would be looking for support in this area. This area also coincides with roughly the 78% Fibonacci retracement. So this 167.64 up to 94 area is what I out on for the British pound for a buy. But even though I did do then confirm our analysis, so we do have to get a buy via a candlestick pattern. Okay, now I will some questions. I'm not seeing the chat window it at all. What's happening here? Jonathan, I cannot see the chat window here. I don't know what is happening. questions, what I can do for you, if you can hear me, is for some reason the chat window disappeared. What we could do is, I'm seeing some of the questions. I mean, we have quite a number of you still on the webinar, but I'm just not seeing the chat window. So some questions came in earlier, so I'm just going to answer those questions for the meantime. Okay, question that someone asked was, how do you use the risk calculator? Okay, so let me introduce you to the risk calculator here. Okay. Can everyone see the risk calculator? Okay. So how do we use the risk calculator? I mean, when we position trade, a common thing folks tell me is that the risk is too large, the risk is too big when position trading. But I will submit that the correct way to put on a trade, the correct way to put on a position trade, it doesn't matter what your equity is. Let's say you have $10,000 in a trading account and you want to put on let's say we want to put on this British pound trade. The risk is a whopping 300 pips, and you only want to risk 3% of your trading account. What you will do is enter 3% here on the percentage risk. Amount is 10,000. Your pips, it's a 300 pip stop loss. The pip value is $10 for standard lot, 300. Okay, and your contract size will be 0.10. So your contract size would not be a standard lot. You will reduce your contract size depending on the stop loss. So that's how you're able to keep your risk within. Let's say you say I'm only going to risk 2 to 3% of my account. That's how you keep the stop loss within that range of 2 to 3%. Let's say you wanted to only risk 2% and your stop loss was 150 pips. You would see that your contract will now be 0.13 of a lot. So that's how we use the risk calculator. And to get a risk calculator is acestrading.com/webinar, and you will get this for free. Okay. Question: what will happen after you apply? What will happen after you apply? You will speak to me personally, and the deposit is 100% refundable, and you will then be invited to join the program if it's a match. If it's not a match, then you won't. Then we can mutually agree that it's not for you, and you get your deposit back. Very simple. Okay. Why is there an application? Okay, the reason for the application is that folks, as I said on the webinar, there are some folks that think that the Forex market is a get-rich-quick scheme. I mean, a lot of it is perpetrated by people who do unscrupulous advertising. And what they say is that you can become rich instantly trading the Forex market. That's basically what they're saying. There are a lot of these binary options things. That is just not true. And in this market, what I find is that there are a lot of folks like that who would want to apply, because they think we can turn 5,000 into 50,000, even though I've repeated over and over that that's not the case. I still get folks who apply that think that. So I just like to have a chat with the person to see if this is right for them. Where am I located now? I'm currently in Miami. Why do I use candlestick charting? Okay, the reason I use candlesticks for my charting is because candles give you a greater visual view of what's happening. It's just visually more appealing to me to use the candles. So that's why I use candles. Let me just bring up a live chart here. I mean, this is just a prettier chart. I mean, you can see what is going on. And a standard bar chart, where's my tool here? It's like the tool disappeared on me. Chart type bar. I mean, a bar chart to me is just, it just doesn't portray the same information that a candle chart will. And this is a bar chart in front of you. And you can have a line chart that tells you absolutely. I mean, this just tells you that it's in an uptrend. It's not really telling you anything else. Okay, how are pivot points calculated? Okay, there's a specific formula for the pivot points, and we go over it in the course. You can also look it up online. I mean, it's available everywhere for free, really. It's a standard formula, and you can get them drawn on your chart depending on your charting package. I have eSignal here, and it automatically plots, as you can see here, M1, S1, it automatically plots pivot points on it for me. If you want that application, you can send an email to ACES or Bion, BION at acestrading.com, and I will send you that formula for those of you who have eSignal. Okay, how is the course? The question is, how is the course delivered? The course is available instantly online, and this is what I do. Every week I release a number of the videos. Maybe there are some weeks I'll release 4 videos, another week I'll release 2 videos, because some of the videos are quite long. And what I find is that to avoid overwhelm, it's best to break up the course into chunks so that folks can actually take the time to go through the course. So it will be available online in a members area for you for life, essentially. So you can watch the videos as many times as you wish. And as I said, it's over 18 modules. Okay, I cannot see how many people have applied so far. I mean, the button should be on your right. If it's not there, you can go to acestrading.com/apply, and let's get let's get started. Let's get going. For those who are asking questions, it's not everyone's question I can see. For some reason, the software is not allowing me to see the rest of questions. So I'm just literally looking at some of the questions that were submitted via email and earlier in the broadcast. Okay, and another thing I need to emphasize about trading is that trading is something that takes patience. If you are a very impatient person, it won't work out for you. And I'm just being brutally honest. There are folks who think that they enter a trading program and they must see profits every month. That's not the real world. It's rare that you find a trader that is profitable every single month out of the year. The whole point of trading is to make money over the period of a year. And that, when you're trend trading with the method that I'm going to teach you, there will be some slow periods, there will be faster periods. So you just have to stick it out and wait it out at times. And that's just the reality of the trading. Okay, so it's acestrading.com/apply. If you have any questions, send it to bion at acestrading.com. We are currently seeing the Japanese yen decline pretty sharply. Let me see if it's across other pairs. Euro is rising slightly. Franc is declining. British pound is going up slightly. Okay, this looks like there may have been some announcement. Sorry, but the key area for the euro on this chart is the 133 level. If the market breaks 133, we could continue to see this market fall. Okay, so at last check I saw about 8 applicants. I'm not getting the information real time, so I would like to congratulate you. We're going to do the calls tomorrow, and I'm going to set some appointments for tomorrow and also for Monday. Monday is the 11th of August, so we're going to do some for the 11th of August. But everybody will be hearing from us tomorrow at least. Okay, I hope everyone enjoyed the presentation, and I apologize for the. I mean, it's just sometimes that's what software does. I apologize for not being able to even see a lot of your questions. But I guess that's how technology works. Let me see if I can. Let me see if I can change an option here. See if it works. Chat. Chat. Okay, let me see if. Okay, let me see. I just did something so that do you see a chat box reappearing? My events. Uh, okay, I'm still not seeing the chat. I tried. I have to get someone on my technical team to do this. I tried, but I don't know why. So again, acestrading.com/apply. Uh, and for those here, if you really want me to answer your question, no, I will stay on for another 5 minutes. You can send an email to bion@acestrading.com, bion@acestrading.com, and I will answer any question I receive via email. Okay, it's just taking a while to bring up my email. Okay, looking, I do have some questions. Okay, Jeffrey, I have received your application. Okay, Jeffrey. Jennifer, yes, I have received your application also. Fibonacci retracements. Okay, question, how do you do Fibonacci retracements? How do you determine the AB points? Okay. You do it from, this British pound is a perfect example. You do it from the immediate swing low up until the swing high. So you have your swing low at 167, your swing high at 172 here. So let me just erase this. Low to high, and you will have your 38% retracement, your 50% retracement, your 618%, and your 786 retracement. So that's how you draw the Fibonacci retracement correctly. So from swing low up until the high, and you get your retracement points. Okay, so I must thank everyone for being on this webinar. I look forward to speaking to you all. acestrading.com/apply. Have a very good night, and thanks for listening.